Hey guys, what's up? In this training, I'm going over this powerful credit spreads trading strategy that makes $1,000 every single week, and it's beginner friendly. Now again, if you can't tell, I'm not in my normal spot because I'm at a hedge fund conference in Miami, Florida. I live in Houston. Anyways, so I haven't had the time to really put in-depth step by step the type of trainings that I like to release for you guys on Saturday. So this one's going to be more a fly by our seat kind of deal. I'm recording this in the Airbnb, but anyways, let's dive in and jump into it. I'm going to give you behind the scenes, revealing the curtain, the strategy that I've used and spent years and a lot of money to develop. Here we go, step by step. Let's dive in. Before we get into it, if you already know what credit spreads are, that's awesome. If you don't, if you do, please bear with me as I quickly teach those who don't. Okay, cool. So if you've never heard of a credit spread is an options trading strategy that allows you to make money in multiple different ways. So for instance, let's say this is a stock right here. When you're trading stocks, you can only make money in one of two different ways. You buy the stock, and the stock either goes up and you make money, or it goes down and you lose money. Those are your only two options when trading stocks. Well, guess what? When you're trading options, you can give yourself way more options to make money. So for instance, let's say the stock is trending up like this, and I think in general the stock's going to move higher. So I'm going to put on a put credit spread. Don't worry, I'm going to explain more what that is later. And at this level, so basically it means that if the stock goes up, I make money. If the stock stays flat or trades the same, I make money. If the stock goes down but doesn't break my level, I make money. So the only way I lose money if the stock goes way down and passes my level and trades below that by the certain time. So anyways, stocks, you only have two ways of making money, and options, using credit spreads, you have three different ways to make money out of four. This dramatically increases your win rate and allows you to make money every single week. And when you treat this the way I'm about to show you in this video, not only will you be super consistent because you're following the strategy that actually works, but you'll be able to do this on repeat to almost create like a weekly paycheck. All right, so now let's break down. There are two different types of credit spread trades. There are call credit spreads and put credit spreads. I'm going to start with a put credit spread. A put credit spread is used when you think the market is going to move higher in general. That means you're hoping the stock goes up. Now, a call credit spread is the reverse. It's hoping the stock goes down over time. So if I'm trading a put credit spread, let's just say put, and the stock is currently trading here, I go below the stock price. I think, okay, where's the stock not going to go below? And so I move the trade all the way down here. So let's say the stock price is currently here, and I put my level here, which means that I make money if the stock goes up, if the stock stays the same and stays above my level. That's how I put credit spread works. Now on the inverse, a call credit spread, let's say the stock is trading here, hopes for the stock to kind of stay down. So that means I put my level above the stock price. So right here, I put my level here, which means I make money if the stock goes down. I make money if the stock trades sideways, and I make money if the stock goes up but stays below my level. Now, what is this sounding like? It sounds like you can now make money when the market goes up and down. So if you're excited for bullish markets, use a put credit spread. If you're kind of fearful for upcoming collapses, like maybe the banking crisis and all that going on, use a call credit spread. All right, so these are your different credit spreads, how they work, etc. We'll get in more into the details later, but I just want to talk about how those credit spreads work. Now let's go into the strategy in depth and how we place, because you may be saying, okay, Austin, that's cool, but how exactly do we actually know what levels to place on, right? Like I said, when you're trading these credit spreads, you need to know a level. And so how do we pick these levels? Well, most people like to come onto these charts and they look, okay, technical analysis, right? Where's my support levels? Where are my resistance levels? What are my trend lines? All these things. Guess what? Those can work, but I like to use a more consistent, easier approach that doesn't rely or doesn't count on me having to watch the charts all the time. Instead, I like to follow more of a general system. So anyways, what I like to do is, in general, I come on here and I add a moving average line, which is what this is, the 200 period moving average. If the stock is above that, guess what? The market's bullish. It's more likely to go higher. If the stock is below it, it's more likely to go lower. So guess what? If it's below, you're typically trading call credit spreads. If it's above, you're trading put credit spreads. So that's kind of how that works. But because I want to give you everything step by step, like I'm teaching you as one of my coaching clients, even though I don't have coaching clients, but I was saying if I was to coach you one-on-one, then how would that look? Well, I'm going to show you exactly behind the scenes. Here we go. Let's dive into a strategy that I've been using that can make you literally 20 to 30% every single year on autopilot. Don't believe me? I'll show you the back test here towards the end. Okay, here we go. Actually, let me just show you quickly some proof. Here is my program right here. You can see here, I'm pulling up my trading platform on Tastytrade. This is what I used to trade. You can see here, if I highlight all my trades from the last 30 days, I can even go back further if you want. Let's go 60 days, whatever. You can see here the amount of money that's being made. Let's stick with the 30 days go, just to say a matter of a month. You can see here on the 30-day mark, I've made $6,300. And so again, if I subtract commissions, I'll say make a clean $6,000. So that means every single week I'm making what? I'm making roughly $1,250. So again, if you want to make that on a weekly basis, this is the strategy I'm using and this is what you want to follow. All right, so let's dive in. I'll show you more of a backtest later. But if you want to know what the strategy is in depth, you can actually click the link in the description below and I'm going to walk you through this. This is a free handbook and trading guide that I put together that explains credit spreads, my philosophy, all this stuff, all for free, no email, no nothing required. Just click the link down there and get it. So I'm going to follow it. I'm going to go right here, the True Total Strategy Trading Guide. Right here, these are the steps I'm going to follow for today. We're going to trade in between a range and do all these things, but I'm going to map this out for you. All right, here we go. First thing we do when we go on a chart. Well, first off, I created this trading band indicator that is only available for my inner circle members. But again, I want to show you how to recreate it because again, I can't give you access to this because those are only for members. But if we want to get semi close to what that is, let's do this. Let's go onto our chart, pull up in the indicators tab if we can do that. For some reason we're not. Page. Maybe I should like disconnect from this. Sorry guys, I'm not in my normal setup at all. I'm in an Airbnb, probably not the best Wi-Fi either, but please deal with if you can work your way through this. This is gonna be a great training. All right, so the Bollinger Bands is the first thing that we want to add. Let's do this. Hopefully Bollinger Bands will add here in a second, or not. We'll just see how bad this training can actually be. Bollinger Bands. Oh, there we go. They've added. Okay, cool. Bollinger Bands. Now we're going to go into the settings. We're going to change the period to 200, and we're going to change the standard deviation to 1. All right, just like that, now we have these Bollinger Bands. This is, you can see here, if I pull up the band that I created, it's not exactly the same. You can see here it's not exactly the same as the blue, but it gets you close enough and it's free. So let's do that, okay? So here it is. And how this works is as soon as the stock, anything you're trading, particularly this works best on SPY, DIA, TLT, highly liquid ETFs. So as soon as it breaks above this top band, this is known to be an uptrend. So it breaks this top line, we're now in an uptrend. So that's how you know when to put on your positions. If the stock is above this every single week, just put on a put credit spread. So if the stock is above this, put on a put credit spread, but that's not the first step. First thing we know, okay, cool. Now we need to wait for the stock to be above the green and yellow line. So for instance, this is just being above this top line on the Bollinger Band settings that I set. Next, you want to determine your short strike price. What is the level we're going to use for this credit spread? Well, we take the current stock price, whatever that is, and multiply 97%, or go 3% below the current price. So right here, the current price is 412.13, or at least that was the most recent close, 412.13. So I'm simply going to multiply that by 0.97 and round up to the nearest whole number. So it shows right here, $399.76 if we round up 400. That means my level that I'm placing is the 400 level. So right here we go to the 400 level. This is the level I want the stock to stay above. And again, it always seems to work out well where it seems to play out with support and resistance levels. You see support here, it's below it. So now we have an extra level of safety. Anyways, as long as the stock stays above 400, by the end of this trade, we make money. Now you may be saying, okay, cool. Now I know my level. How do I know how long to stay in this trade for? Well, like I said, go grab your free trading handbook down below. It tells you right here, your expiration is the current date plus 12, round up to the nearest next Friday. So right here, it's May 11th as I record this video. So May 11th, then we're going to add 12 days. So that makes it, what, the 23rd? The 23rd, I don't know what the next Friday is, but whatever that next Friday is, that is your expiration day. Let's just say the 23rd happens to be a Friday. No, actually, it's going to be the 24th, isn't it? Yeah, it's the 24th, I believe. Don't correct me if I'm wrong, but let's say the 24th is that next Friday. So now our expiration date is the 24th. Now what I'm going to do is I'm going to go to my broker. I guess we can just pull up Tastytrade since it's already up. We're going to go to SPY. We're going to go to Trade. We're going to go to, I believe it's May 24th. We're going to go to 400 as our level. Okay, this isn't a Friday. 26 is the Friday. May 26th is the Friday. You can see here I've actually already put on this trade with 20 spreads. But anyways, I'm going to sell the 20 and I'm going to buy the next level above it as or below it as protection, and now I can get 12 cents to put on this trade. Now again, as you can see here from this, we want to make sure we can at least collect 15 cents. If you can't collect 15 cents, it's not time to put this trade on yet. And so that's exactly what we're seeing here. It's not quite time to put this trade on yet, and so again, we're not going to put this trade on. But again, that's what you're going to do every single day. You're going to simply come to the chart, do 97% or 3% below the current price, as long as the stock is above that the Bollinger Band settings that I showed you. And if you can collect 15 cents, then you put on the trade. Now, why? Well, because if you want the trade to work out long term for you based on the amount you stand to lose and the amount you stand to make, you want to make sure that you have at least 15 cents in credit. Okay, if you want to learn more about this strategy, there's not really much to know outside of the backtest, because this works off basic common psychology and principles. The market trends in different, it trends. It's either going up, down, or sideways. You know almost for certain that the market in general will trend higher if it's above this band. So we're just basically following the trend, following the big waves of the market, and using credit spreads to capitalize on those trades. Now you may be saying, okay, cool, so that's how I enter, that's how I do all that. What about exit rules and stop loss rules and all that? Well, like I said, the trading handbook that I mentioned has it all. If we scroll down here to the bottom, early exit rules. You can exit a position if you can buy a credit spread back for 5 cents or less. Why is this? Because if we can close a trade out for 5 cents, because typically we want to hold these trades until expiration so we can collect the max profit or the max return. Typically we're able to do that. But let's say we have a week left in the trade. Well, we can collect 5 cents or less, let's say 3 cents, then we're going to buy it back for 3 cents. Why? Well, because we still have a week left of trading, so we might as well take most of the profit that we can get from this trade and put that collateral that's now freed up into the next trade. So now we no longer have risk in having to hold for a week and hoping it stays above. Instead, we take most of the profit, and what we do is we roll that into the next trade, and we keep doing that over and over and over. Now you're saying, okay, cool, that's what happens when you're in a winning position. How do you exit a losing position? All right, well, we hold these trades until expiration. Why? Well, because we have a really, really high win rate. If I go right here, if we so specifically SPY, and I change it to the $1 with it, runs the whole back test on it. Talking right here, again, you can see I'm looking at the turtle strategy. That's a 95% win rate with an annualized return of 30%. This is factored based on the fact that you hold the trades until expiration. That means you let it, so if the trade goes against you, you still hold. Now the thing is, if the trade goes against you, and let's say it's about to expire and the trade is in the negative, what can you do? Well, very simply this. If the trade is going against you on expiration day and you can buy back that spread for less than what your max loss would be, then you might as well buy it back so that you lose less than what your max loss would be. And most times we're able to do that. We're able to close for maybe a 50 to 80% loss. But again, if we have a 95% win rate, where 95% of the time we're making $15, $16, and the other half we're losing $50 to $60, well, in the long run, we make a lot of money. And you can see here from the back test that you can have multiple years where it's all green. So anyways, guys, this is how credit spreads work and following the trend with the credit spreads. If you have a hard time implementing this strategy, well, guess what? You can go check out my Trade Ideas algo, which is also linked below, and it'll tell you exactly what stock to buy and tell you the expiration date to follow, the exact levels to buy into, how much credit you want to collect if you actually want to make a consistent return, the annualized return, and everything you ever wanted to know. Not only that, is once you have your trades active, it actually tracks all your trades. So it tells you how much total return you've actually made, your average return per trade. You can see here, so far since using this, I make about 12% return on every single trade. Who here would like to make 12% return on their money every single week? That is the beauty of this. And anyways, guys, so if you want to learn more about this program, I would highly recommend, at the bare minimum, go grab your free trading handbook. It's going to walk you through every strategy I use, step by step, how to use it and why. Anyways, I hope you enjoyed this video. I really enjoy doing these step-by-step trainings. Sorry if you didn't quite enjoy this one or it was a bit haphazardly. I still hope you enjoyed it and learned something, and press that subscribe button and thumbs up if you did. But again, I'm not in my normal environment. Again, I'm at a hedge fund conference, but coming next Saturday, I'll have a more researched, more in-depth, more planned out training for you that everyone typically loves. So please stay tuned next Saturday for that. Anyways, see you guys in the next video. So excited. Please smash that subscribe and thumbs up button, and I'll see you later.